Appreciate you joining us. I was just looking at the notes here. Near-death experiences. Let's hear about your near-death experiences. What happened there? Yeah, no, company-wise, we've definitely had near-death experiences, and like a good example of that is, so a little bit of the backstory about CoinTracker. I founded the company in 2017, and we basically tried to keep ourselves as small and capital efficient as possible for a very long time. So, for example, we realized raised less than $2 million of funding for the first 4 years of the company, kept the team small, like sub 10 people. And we did that really purposefully to try to stay super lean until we really knew that we had product market fit on something that people really wanted. And then we could grow and scale and raise more people, raise more money and hire more people and things like that. But there was a really tricky point right around the time COVID hit in March 2020, because our business at the time was super seasonal. Like almost all the revenue for the company came through during the US consumer tax season between January and April. And COVID hit, and especially in the US, this really started to hit in March and then in April. And so just crypto trading fell off a cliff. It was deep in the crypto winter. Tax filings fell off a cliff. The IRS totally delayed the tax filing deadline for the first time in US history. And I think our revenue dropped 70% overnight.
Oh, wow.
And so
Wow.
we didn't have like a huge war chest or anything. We had a super small team. And so we were basically 6 months away from shutting down, like 6 months from having zero money in the bank, having to, just wind down the company and like let everyone go. And it was really scary times. It was like, we were months away from being just dead.
Yeah. So what happened? You guys get bridge financing, or was the approach kind of just people will be filing the taxes eventually?
Everything was on the table. Honestly, like the scariest thing was just like, do we be honest with our team about this? Like, do we tell everyone like all of your jobs are at risk and like you might have to go do something else in just a few months' time? And by the way, it's the worst economic environment of the decade. So we were just really unsure what to do. Is this going to demoralize people more? And are they going to then just want to quit even faster? Like, what do we do? And we kind of thought about it and we were just like, you know what, we're a small team. Like everyone deserves to know what's going on. So we just like had a company all hands. We're just like, look, everyone, here's the situation. We have 6 months of runway. It's all hands on deck. We need to do anything possible to survive, cut every unnecessary expense immediately. And if there's any way to get more revenue, anything is on the table, do it now. And, in retrospect, that was totally the right thing to do. Basically what ended up happening is we just cut expenses like crazy. Anything that wasn't existential was cut. Everything that was existential, we like renegotiated lower rates with vendors, and people were really accommodating and kind at that time too. Like everyone knew we were going through this shit together. And then on the revenue side, we launched a new product, which was related to crypto portfolio tracking, and created a new revenue stream out of that. Kind of hunkered down, survived that. And then 18 months later, we raised $100 million Series A.
Wow.
That's a big very drastic change from.
It was crazy. It was really crazy.
Yeah.
Take us back. I mean, you started this in 2017?
Yeah.
So what was your crypto story? How'd you get into crypto initially?
So I kind of like everyone, kind of you hear about it, it's on your radar, you have a friend, crazy person's telling you about Bitcoin, whatever. I didn't really get into the space at all until 2014, when I was a product manager at Google and I worked on a small integration between Coinbase and Google. I was working on this feature called Google Now. It basically like would give you these notification cards on Android when you had a new transaction or when there were price alerts and things like that. And as a result of that, I got a Coinbase account, and the team sent me like a small amount of Bitcoin out of that. And honestly, I still didn't take it very seriously at the time. Until about 2017.
What'd you think? What was your thought at that time? Was it like, oh, this like just internet play money?
Yeah, exactly. It's like the typical, what is this magical internet money? I don't know what this is. Maybe someday it'll be useful, but probably not. I don't know. I just kind of forgot about it. And then in 2017, January, I was really interested in fintech, actually, just more generally. And I was like interviewing for a job at Stripe, and I was like thinking about whether I should just become a fintech product manager. But I decided instead, like, let me try to build something in the fintech space. And as part of that, crypto is a subset of fintech in my mind at that time. So I was like, okay, yeah, let me just go check. I think I have this Coinbase account. Like, let me see what is anything in there still, what's happening from 3 years ago. And that super tiny amount of Bitcoin I had was like, 10x in value. And I was like, okay, like that's kind of interesting. And so I started taking it like maybe a little bit more seriously. But the thing that the straw that broke the camel's back was building traditional fintech software. And we were building this kind of like robo-advisor type of thing that would auto sweep funds over a certain amount into investment accounts and nudge you to invest more intelligently and things like that. And it relied on ACH and Swift rails, which are super slow and inefficient and expensive and don't work on weekends and don't work on holidays and don't work internationally. And we were kind of like, wow, like this is how the financial system works in the United States of America in 2017. Like, how is that even possible? This would never be tolerated in the communications world. I can send anyone anywhere in the world a WhatsApp message for free instantly. This is just digital money. Like, there's no physical bills being carried by a horse and buggy down Wall Street. Like, this is all internet. And 96% of the M2 money supply is digital already. Like, why is this so slow? And so I kind of went back and read the Bitcoin white paper at that time. And I was like, okay, actually, like, I had a kind of a misconstrued perception of the crypto space because of all the hype and the fraud and the ICOs and the nonsense. And actually, if I just read the Bitcoin white paper, it's less than 9 pages long. It's pretty simple. And it's just about a peer-to-peer electronic cash system. Like, this actually makes a ton of sense. There's nothing about ICOs or blockchains in here. And that kind of triggered the proverbial crypto rabbit hole exploration. And next thing you know, I have 10 different exchange accounts and I'm running a Monero full node on my computer and I have an ETH miner in our office. And I'm like, how the hell do I keep track of all these transactions? And that was the genesis for building CoinTracker.
Got it. So you were really solving a problem that you had.
Oh, absolutely. Yeah. It was not like, it was absolutely not a like, oh yeah, let's go build a company for crypto portfolio tracking. It was like, I don't know how to keep track of my own assets. And my co-founder, John, was in the exact same situation. We sort of like independently came back like one weekend and we were like, oh, how are you keeping track of your transactions? Like, oh, I built a spreadsheet. Oh, I have 100 of them. It's crazy. I transfer something from this exchange to on-chain. Like, I have no idea how am I ever going to do my taxes? Like, this is insane. And so we're like, okay, well, why don't we build a solution for ourselves? And we did that. And we're like, this is actually kind of effortful. I wonder if anyone else needs this. Posted it on some Facebook Messenger groups and things like that. Actually, like at the time, I had 0 friends who had crypto, basically. So the only way I knew how to get in touch with people was going through these online communities or like crypto, like messenger groups or whatever. And eventually we got into Y Combinator, the startup accelerator. And that was a real game changer for us because I went from knowing 0 people who had crypto to 200. Like, every single founder had a crypto portfolio. And so that triggered like a lot more sort of touch points with users and customers. And then we were like, okay, yeah, no one cared about any of the stuff we were building before. And multiple people are saying like, I don't know how to do my taxes. And so why don't we double down and focus on this?
Yeah, that's really cool. Obviously solving your own problem there. Obviously, anybody have an accounting background? You were your co-founder? No,
neither of us did. My co-founder was a software engineer at Google and I was a product manager at Google before. So we had more of like a product and technical background. And we kind of quickly realized like, oh my God, like, there's no CPA on our team. We don't have an accounting background. Like, what should we do? And there's kind of like another funny story there where we started emailing CPAs, just cold emailing random CPAs, being like, hey, do you know anything about crypto? Like, do you want to use our software? Blah, blah, blah. And one of these guys responded. This is in like 2018. And he's like, hey, like, yeah, I work on crypto accounting, but I'm based in Houston. But I can fly. I can fly and meet you guys. And we're like, well, we're 2 guys in a garage. Like, we don't know who you are. And I was like, why don't we do a call on Monday? This was like on a Friday. And he's like, Monday's really far away. Like, why don't we chat tomorrow on Saturday?
Wow.
And so anyways, like, we kind of started building a relationship with this guy. And eventually we like hired him as a contractor. He flew himself to our San Francisco office, started like kind of just contracting with us. And like a few months later we hired him and now he's our head of tax strategy. Shehan, he's one of like the top crypto CPAs in the whole world at this point and has like really helped us advance the kind of technical accounting CPA style knowledge and build credibility in that industry and make sure our product is accurate and up to date with the latest regulations and things like that. So yeah, that was an early critical hire.
It's amazing. Yeah, that's really cool. Kind of that synergy and obviously opportunity that happened in real time,
Yeah.
right? All together. Yeah.
Yeah. Tell us about your existing products that you guys currently have. We'll get into what you guys are working on now, but tell us like the existing product suite of products, what you guys are working on.
So CoinTracker's original product is cryptocurrency tax compliance. It basically helps consumers, people like you and me, who have crypto transactions to stay tax compliant, and that's both in the U.S. with the IRS or internationally. For example, with the CRA in Canada or the ATO in Australia or the HMRC in the UK, basically ingests all the crypto transaction data, reconciles it into a clean ledger, calculates income and capital gains and losses, and then produces the relevant tax forms for you to be able to file that information, both for individual filers, for people using tax software like H&R Block TurboTax, or for people working with tax professionals like CPAs and chartered accountants and things like that. So that's our core product. It has 2.5 million users. We've partnered with Coinbase and Uniswap and Solana Foundation and Phantom Wallet and OpenSea to basically try to solve that problem. Now, having made some progress in that space and build a market-leading crypto tax product, we've also built some products that are for businesses.
Okay, so we'll dive into those separately. Let's start with the consumer side of the business. Okay. So, with the consumers, what were people doing before your software? Like, was there even other softwares in 2017?
There were one or two other ones. They were pretty basic. So like we were kind of going through this problem ourselves, right? We were like, okay, how are we going to track our own portfolio? How are we going to do our own crypto taxes? And we kind of were researching. There were one or two products, but they were very bare bones and really basic, not like high tier, like really high quality polished products built for scale and built for complexity and built for like really seamless user experience. So we saw like, clearly we weren't the only ones having this problem. There are other people that had tried to take a stab at it, but a lot of the early products were built around a accountant or a CPA who had seen this problem in their own line of work and realized, oh, okay, maybe I should create a solution around this. And we had a very different approach, which was we're technologists. We actually don't have an accounting or CPA background. We want to build a really easy to use product that is built for scale and complexity and for great seamless user experience. Like that's the background we had coming from the tech world. And we will, hire the right team of technical experts and accountants and things like that to make sure that we're doing things properly. But first and foremost, this must be a killer user experience and web application, mobile application. So we thought we could build something much better, and that's the approach we took, and I think that's paid off too.
Tell us about the issues that exist in crypto that don't exist in the traditional financial world.
So there are some parallels. Maybe it's easier to start with those, which are, for example, if you're totally new to crypto and crypto taxes, the basic paradigm at a high level around how the tracking works and how the taxes work is sort of similar to how equities work. So for example, if you buy a Google stock and then hold it and it appreciates in value and you sell it later, the delta between the original purchase price, the cost basis, and the proceeds, the fair market value at the time of disposition, the delta between those is your capital gain. You apply a capital gain tax rate and you pay the tax. So sort of similar, but the major difference it comes in with some unique elements of crypto that are not present in the equities world and that are very unique to digital assets in particular because they're decentralized. So number one is that many people self-custody crypto assets, or they use crypto assets on chain through a decentralized network, aka blockchain. That's very different than in the traditional equities world or with basically any other online asset, where you have a custodian who is a centralized ledger of all the activity. And if you're making trades within a brokerage like Charles Schwab or Fidelity or Robinhood or whatever, they have a full 100% complete, accurate ledger of every transaction you've had, when you got it, what the cost basis is, what the proceeds are. And you get a 1099 form. Everyone's used to this. It's pretty standardized, pretty easy and solved problem. But in crypto, if I'm trading on Uniswap or have self-custody on my Bitcoin hardware wallet or whatever, there is no company there. There's no Delaware C Corp. There's no institution that is KYCing who I am and producing a tax form for me. At least there hasn't been historically. We can talk about how that's going to change in the future. But because of that, you sort of have this individual tax burden, but there's no one who's giving you all the information around where did these assets come from, what's the cost basis, how long have I been holding them. And that's where the need for a crypto tax aggregator like the CoinTracker comes into play. So that's number one. Number two is that in the equities world, people don't trade one equity directly for another. So you don't trade like Google stock for Facebook stock. You trade Google stock for US dollars and then US dollars for Facebook stock. In the crypto world, some of the most common transaction types are from one crypto asset to another, like Bitcoin to Ether or Ether to USDC. And as a result, you basically have to keep track of two different volatile assets, what their price history is and what their relative pricing is and things like that. And you have a capital gain or capital loss every time you're trading from one crypto directly into another. And that adds another dimension of complexity that doesn't exist in the fiat world. So some of these things, decentralized finance, on-chain, and like sort of crypto to crypto trading created this way new, like sort of novel level of complexity that needed to be solved in a first principles approach directly for crypto. And that's the problem we solved.
Yeah, that definitely is, as to your point, many, and myself included, was looking at different chains and trying to pull different spreadsheets down and all that stuff. So it definitely is a big problem. There's so many more parties, right? So many different pieces to the puzzle. To your point, wrapping the multiple coins together into another protocol. Now you get yield from that. Now it's another
Totally
taxable situation, right? To your point. So it definitely can.
Yeah. So really, I guess to kind of summarize those 2 points, it's really the ability to move these assets from exchange one to exchange two, whereas your traditional assets are just stuck in your Charles Schwab account or your Fidelity account. And then also the trading pairs, right?
Exactly. And on the first point, it's not just between exchanges. It's not just like Kraken to Coinbase. It's also self-custody. Whereas like it's pretty rare for people to self-custody stock certificates today.
Right.
Whereas with crypto, like you have $1 million of crypto on, USB stick, and there's no company there. There's no one producing your 1099 form. There's no one tracking that cost basis. You have to do it yourself.
Yeah, to your point, it's more of a technology play than a broker dealer being involved. So it's true technology to technology integration.
Exactly.
Yeah. Talk to us. What are some of the biggest issues with tracking DeFi transactions?
So the biggest one is what we just talked about. There is no company there. There's no one tracking it. So you have to track it yourself. So the sort of burden falls upon the end user transacting to figure it out. That's number one. Number two is that it's a fast moving space. I mean, you guys know this probably better than anyone. It's not like there's one new DeFi protocol released every 5 years and there's really great documentation and detailed API docs of like, here's how to track everything. It's total Wild West. Every day there's a new protocol launch. There's a new L2. There's Lightning. There's USDC launching on multiple networks. There's smart contracts. there's DeFi on Bitcoin through stacks. So there's constant new stuff happening. Everything's changing. There's no standardized, unified documentation of how to build these integrations. Everyone's handling things a little bit differently. And so there becomes a lot of integration complexity to accurately capture the true nature of what each of these transactions are and what is the taxability of them. There's also a lot of gray areas. Not all these things are clearly spelled out from A to Z because they're changing so quickly, and different people might have different interpretations of, hey, is bridging a taxable event? Is wrapping a taxable event? What if I do this thing on that chain? What if it's liquid staking versus illiquid staking? So there's a bit of complexity to it, interpreting the rules and making that sensible and understandable to your average person who's not going to go read the IRS tax code to figure out what's going on and kind of wants us to figure it out and give them something reasonable.
Yeah. Well, and to your point, I mean, just the rules themselves, people move the goalposts and trying to figure this out in real time. Like, for example, a tax wash sale rule is not a thing in crypto. It is obviously in equities, right, and everything else. So stuff like that comes up. I'm assuming you guys are having to refine and iterate as things happen in real time, right?
Exactly. Yeah, the rules have and do change, and they will continue to change. And so we need to make sure all the stuff that we're doing stays up to date with that. And when they do change, we need to give people a seamless migration path. So an example of this recently, for example, is there used to be the ability to track crypto lots either universally or per wallet. So per wallet means, you have one queue of cost basis for the Bitcoin you're holding in Kraken versus a different one in Coinbase versus a different one in your self-custody wallet. Yeah. Whereas universal is, Bitcoin held anywhere, who cares? It's just one big queue, first in, first out, or whatever. And the IRS came out with new regulations saying, oh no, you have to do this per wallet. And so anyone who was doing it universally before, now, okay, they need a new way to migrate from that old world to the new world. And that's a complex problem. There's you might have partially consumed tax lots, and which ones have you already used, which ones you haven't used, how do you prove that, where's the documentation? So when things change, we have to be on top of it, know what the rules are, clearly understand them, build the technical workflows and product experiences to make that transition really seamless for people. And that's part of the value prop of what CoinTracker does.
Very cool.
Yeah. On the regulation side of things, yeah, how do you guys go about working with so many different jurisdictions?
We basically just have to build relationships and stay up to date with what's going on. So part of it is having the right people on the team, people who are CPAs and who are in the know and who are certified and compliant, and talking to the relevant regulators or people building the rules in various jurisdictions. It's staying up to date with what's going on, going to the right conferences, being part of the right trade groups. So, for example, CoinTracker is part of the Blockchain Association, and they're really really up to date on what's happening in terms of regulatory compliance, new tax rules, et cetera, in Washington, D.C. And building the right connections and relationships. I mean, it's about staying up to date and caring and being present where the decisions are being made.
How many regions you guys in?
So varies by product. For tax, for consumer tax, we currently support US, UK, Canada, Australia, and we're going to scale internationally in the coming months to many more jurisdictions. On the portfolio tracking side, we actually have paying customers in over 100 countries at this point, because the kind of beauty of it is that crypto tracking works globally. Whether you have a Bitcoin in Mexico or China or India or the United States, it's one Bitcoin is one Bitcoin.
Yeah, it makes sense.
With the tax lots changes, so I know that that's like a big thing in the US. When does that go into effect for crypto?
So that migration happened for universal to per wallet. There was basically a safe harbor period that IRS gave, which said, hey, look, we're creating this new rule. We're clarifying like how this has to work. And so as long as you make this transition by, I think it was December 31st of 2024, then you're good. We're not going to come after you because you have this transition safe period. And so that has come and that has gone. But there are going to be more things like that going into the future. For example, there are these new 1099 DA regulations. So there's this brand new tax form coming out for the first time ever called 1099 digital asset. And everyone is going to start receiving these next year. So in January 2026, stay tuned. Basically, all the brokerages like the Krakens and the Coinbases of the world are going to start sending these out to all of their customers. They're going to be required to by law for US customers. And that's going to include every time they disposed of an asset on that platform, here's what the asset was, here was the date, here were the proceeds. And people are going to basically have to start using that information to complete their tax filing. But the sort of tricky thing there is if you had assets that came from on-chain or from one exchange and then moved into another one, you'll have this uncovered cost basis problem where the exchange doesn't know when you got the asset or what price you bought it for. And again, that's kind of where CoinTracker is helping fill the gap.
I guess, so to your point on that thought process, like going from your own wallet to an exchange, and then have a transaction there, how do you track all that?
Exactly.
Yeah. So with your guys' partnerships, you mentioned like you guys are going to be working with like Coinbase, Kraken, different brokers like that. How are you guys? Let's say that I'm a user of Coinbase. I make a transfer from my personal wallet to Coinbase. Are you guys just going to kind of prompt, what did you pay for this asset, or how do you go about figuring that out?
Well, so what are we going to do about it? Well, the beauty of CoinTracker. So the problem with that model is that it's very manual and people don't have good records, right? Even if you've made a couple hundred transactions, like people do not keep track of what cost basis or what date they bought what asset. And especially if you've been holding it for a while or transferring it from wallet to wallet or whatever, people don't have these records. And I know this. I've done tens of thousands of support tickets myself. Like the number of times people have asked me, I don't have any records, what should I do, is countless. And so it's a very poor experience to basically like expect that of your average consumer. And so the kind of beauty of CoinTracker is that instead of doing that, what we enable people to do is connect read-only access to their wallets and exchanges. And then we just pull all that information either from the APIs that those exchanges offer or on-chain from the blockchain directly based on the public addresses of those wallets. And that way, users don't have to remember anything other than which exchanges or wallets are they using. you connect access, we pull all of the data historically, retroactively, and continuously going forward, including every transaction, every cost basis, every proceeds, date of every transaction. We reconcile all of that for people and then fill in all those missing gaps and details automatically. That's kind of the beauty of what we do.
Got it.
Has the data gotten better? As obviously there's nuances, right? Well, like sometimes gas fees aren't broken out of a transaction. Sometimes things like that. I'm curious how that data has gotten better over time.
It's gotten better and worse. So it's gotten better in the sense that the top players have built better APIs. For example, like Coinbase, the delta and the quality of like the information they offer in the APIs that they have now versus in 2017 is just another level. However, the complexity has also gotten to another level. Like when we first built CoinTracker in 2017, I think Coinbase had 3 assets listed. It was like Bitcoin, Ether, Litecoin, and like it was pretty simple world. Most people were just transacting, buying and selling Bitcoin. Nowadays, people are on Solana dApps and they're doing L2s on Bitcoin, and people are going crazy with stablecoins and they're bridging stuff all over the place. So yeah, there's better data, but it's also the space, the surface area of how many integrations you need to have and how many you need to keep up to date is just on another level too. So overall, the problem remains challenging.
Yeah, for sure.
What are some of the unique strengths that set CoinTracker apart from your competition?
So I think one of the major ones, to come back to a previous point, is user experience. We've really, really tried to build CoinTracker to be very easy to use. And I mean that in sort of multiple dimensions in the stack. Like on the top level, it's a beautiful product. It like looks really nice. It's very modern. We've used all the modern web and mobile standards to make it delightful kind of to use. And that's sort of unique in the crypto and sort of especially tax space, where it's normally people are used to like clunky, terrible tools that no one cares about user experience. But if you peel back that layer, underneath that, there's actually a lot of heavy lifting and engineering and complexity that goes into accurately capturing, to your point, these complicated DeFi transactions, for example. And the difference between someone coming in and having to spend 10 or 100 hours manually filling in cost basis and like, oh yeah, like what asset did I put into that liquidity pool 8 months ago? Like try to figure that out versus you come in, everything's auto categorized. We've already ingested every smart contract. We know exactly what's happening. You spend 5 minutes, review the transactions, get your tax forms. The difference between those two user experiences cannot be overstated. So it's kind of the beautiful experience that we've created from the ground up, from the engineering layer all the way to like the design layer and the user experience layer. That I think in a nutshell captures what the difference is on the consumer side. And yeah, again, underneath that, there's so many levels. There's the amount of integrations, the depth and breadth of them, the DeFi coverage, like really strong customer support. But it all comes down to making a much simpler user experience.
Yeah. Is there any features that you are particularly proud of?
I think like one of the most useful ones, and I myself just use this. I continue to use CoinTracker every year for my personal crypto tax filings, is a tax loss harvesting feature. And this comes back to the point you were making earlier about wash sales. But basically, because crypto assets are some of the more volatile assets out there, it creates these really compelling opportunities to sell assets that you're holding at an unrealized loss. So you realize that capital loss, reduce your tax bill, and then you can eventually get these assets back. So you can actually maintain your exact same portfolio composition while reducing your tax bill. And many times people have like humongous opportunities to do this because of the volatility of these assets. So you're basically maintaining the same risk profile, lowering your taxes, not just in crypto, but you can also offset gains in other parts of your tax as well. You can offset like sort of equity capital gains or even income up to $3,000 a year per single filer. So it becomes not just we're helping you solve this tax compliance problem, but we're actually also helping you build like a better financial portfolio for yourself. And I love that feature because it helps save people a lot of money.
Yeah, for sure. And hopefully we keep that tax wash sale process going forward and no changes.
Yeah, I don't know.
We'll see what happens.
We're all holding some meme coin bags or some NFT bags that we could dispose of.
Yeah, I don't know.
Right.
I don't know how much longer that's gonna last, but yeah, it's like there are these opportunities. They exist today. Like really rich people who have really fancy like accounting teams are taking advantage of them. So I love when we can take those types of things and make it available to lots of people.
Yeah, for sure. But tax efficiency, not just compliance, but tax efficiency.
Exactly.
For your own situation.
Exactly.
Yeah, makes sense.
Cool. So you guys are, let's jump in the institutional side of things. So you guys are launching your institutional product. So, tell us about that kind of. What are you doing in the institutional side? How's it different than the consumer side? Kind of give us the high level real quick.
Yeah, or even just I would say just from a demand point of view, how you thought about that going into
Yeah.
starting this new product too.
Okay, let's break it down piece by piece. So basically, we spent 8 years building this consumer product, crypto taxes, 2.5 million users. It's gotten, it's kind of the market leading product in that space. During that time, number of times, people who have companies or foundations that are accepting crypto or making crypto payments have said to us, can you help us with our crypto accounting? And we basically said, no, sorry, we're a startup and we do one thing. And we've kind of got to a point now where I feel confident enough in the consumer product where I feel like we can actually take another bet and do something more. And so we're basically launching CoinTracker Enterprise, which is our B2B crypto accounting subledger. And it enables organizations that transact in crypto to stay crypto compliant with their crypto accounting and bookkeeping. That's what CoinTracker Enterprise is in a nutshell. And it's born out of people already telling us that they're hacking the consumer product to serve their B2B use case, even though it's not really built for that.
Right. I would probably, you may agree with this. I would say it's probably same problems, same challenges, but I would say there's probably even more legacy systems and tools on the B2B side than there are on the consumer side. Would you agree with that?
Yeah, it is a very similar problem, which is why we feel really well suited to tackle it. And yeah, the integration complexity is just on another level with B2B and with enterprise. You not only have the crypto integrations, but you also have the ERP integrations with tools like QuickBooks Online and Xero and things like that. So yeah, there's sort of another dimension to the problem.
Yeah, I guess some of those problems, and we just talked about a few on the consumer side, obviously the tracking of rewards payments and all these other things, different DeFi activities. But even from a legacy perspective, like decimal points in an accounting system going from traditional to crypto, I mean, obviously maybe 4 to 5 decimal points versus maybe 18 on a token or something like that.
There are
Stuff that comes up like
there are definitely interesting problems that come up there. Like for example, when you round 8 decimal places of Bitcoin to 2 decimal places of fiat, you always end up with these rounding errors. And there are all these interesting edge cases that you have to design for, build for, and ideally, again, make the user experience super simple. Like an average accountant shouldn't be an Excel monkey who is spending all their time reconciling decimal places. What we want to do is make people feel like they're in charge. We basically want to build a subledger that makes people feel superhuman. And instead of being an Excel monkey, you are now a strategic financial asset to your company that can help provide insights that drive the business forward because all the reconciliation work is being accurately and quickly done in an automated way. And that's the kind of experience we're building.
What are some of the, so obviously with the consumer, we pretty much are just looking to have our crypto tracked for the most part, gains, losses, things like that. What are some nuances with the business side of the picture?
So, from a 30,000 foot level, it's similar. You want to basically track what's going on with the crypto. But when you dive into the details, the devil's in the details. There's all these other complex things that businesses are doing. So number one is that different businesses are using crypto in different ways. For example, some are using crypto to accept payments. Some are using to pay vendors or contractors or do payroll, things like that. Some are mining companies where the source of income is through staking validation rewards or through mining income, things like that. So there are these different types of use cases that we're building around to support different types of businesses really well. Some are doing speculation, investing, trading, hedge funds, whatever. So we're building a product that can really serve the different types of ways that organizations are using crypto. And there are different types of product flows that make sense for that. So I'll give you an example. Like let's say you are making vendor payments with crypto, and actually CoinTracker ourselves as a company does this. So you might be paying the same vendor over and over again, maybe with USDC or Bitcoin, Ether, whatever. And it's really useful to have kind of like a contact book of, hey, I'm paying XYZ person. This address represents this company or person or vendor. And so we now have these new features where we basically match addresses to people or to companies and then make that reflected everywhere in the product. And then you can create financial statements and reports of like how much money did I send to this person or this address, or who's paying me? How does that tie into accounts receivable and accounts payable? And how do I do invoicing and bill pay? So it brings together more parts of the full financial back office together in one integrated experience.
Yeah, very nice. I guess to your point, so a full general ledger system, financial statements, things that a business would need, institution would need. You've had kind of that built out in internally in the system there.
Exactly. And like the traditional ERP systems don't handle digital assets or crypto. And so it's like, how do we plug in, how do we bridge basically the crypto world into the accounting world that people are used to working with? How do you create seamless financial statements, statement of digital assets, income statement, balance sheet, cash flow statement in a way that is really easy to understand for your, your CPA, your controller, your finance professional? And that's exactly the experience we're delivering.
Yeah, that's really cool. Yeah, what are some interesting things you're seeing? Obviously, it's 2025. As you guys about to launch this product, institutional product, which is fantastic. What are you guys seeing? Kind of just obviously with regulation changing with crypto in the U.S., a lot of things happening in real time. Just any trends or thoughts from that lens?
Yeah, good question. I think there are two major ones that we're seeing. So one is you said we touched upon is the regulatory environment. Regulatory environment was pretty hostile towards digital assets over the last few years, and it kind of it hindered institutional enterprise adoption because businesses need certainty and they want to operate in a regulated environment where there are clear rules and where they're not going to get slapped with lawsuits. And so now that environment is becoming way more pro crypto, way more crypto friendly. And so we're seeing that drive this wave of institutional adoption of digital assets. So that's number one. Institutions, businesses are taking this way more seriously, and there's more of a path towards institutional and business adoption. And there's multiple fronts from that. There's sort of like more regulatory friendliness. There's more clarity. There's ETFs now for Bitcoin, Ether, things like that. And number two, kind of tied to the regulatory front, but the big trend that's happening right now is around stablecoin adoption. So basically, we're seeing that, another reason that institutions and businesses have been hesitant to adopt crypto is because of the volatility of various assets like Bitcoin, Ether. I have my own thoughts about how that's going to evolve over the longer term. But in the short term, if you are like a margin sensitive business or whatever, maybe you don't even care about crypto, but you do care about paying low fees and having fast payments and quick settlement, or maybe international cross-border payments. Those are very concrete use cases that right now stablecoins are pushing the barrier on what is possible. So for example, I can send $1 million of USD coin to anyone in the world instantly, or within sub 15 seconds with really tiny fees, and they'll get it right away. They don't need to have a bank account. They don't need to go through multiple intermediary wire institutions, anything like that. So that it's like a real use case that people are going to start taking really seriously. We're already seeing the adoption of that really start to pick up in a meaningful way. And that's something that we are pretty excited about building around, especially as there becomes more regulatory clarity around those types of products through the Genius and Stable Acts, hopefully over the next year or two.
Yeah. I guess, and on that, I don't know if you guys are saying that with businesses being able to not go to a bank and get a very low yield, now they can kind of utilize a stablecoin savings mechanism or to take their money and put it into a higher yield environment, shall we say, and be able to track that now for the business will be pretty interesting.
Totally. I would be remiss if I didn't. So if my CFO were here, or like our head of finance at CoinTracker, what he'd say is, okay, well, yeah, like a traditional sort of like head of finance or CFO can basically put traditional assets into a money market fund or treasuries or whatever. So you can still get high yield, but it's a little bit more cumbersome. But it's still totally possible. But it's sort of like everything you can do in TradFi, you're going to be able to do in crypto rails as well. Plus, it's going to be easier. Plus, you're going to be able to do all these other things that you cannot do in TradFi, like sending money anywhere 24/7, 365 for low cost, fast, with quick finality, cross-border to anyone, regardless of what banking institution they have, and through programmatic payments, which just does not exist in TradFi. So it's like everything you get with TradFi, you're going to start getting with crypto rails plus more things. And so it's going to be like, well, why stick with the old thing if you can do all these new things? And the analogy I have in my head is kind of like the migration from using like sort of like CD-ROMs to like MP3 players or iPods or whatever. It's like there's this new technology. It allows you to do all these things more. Like, why would you not use it? It's better, faster.
100%. What do you think? Just the banking, you have the banking side of things, which is slow. To your point, settlement is it's closing the weekends, and you have the asset management side of things, which is like T+1 or 3. But in a 24/7 environment, when you have lower costs to move payments wherever they need to go, and a different yield environment, and a lot of these fintech firms are looking at this, and now traditional players are saying, "Hey, what can I, take advantage of it?" It's pretty compelling, right?
Exactly.
Yeah. I could see, I'm sure there's still some things that need to be figured out. Like, I mean, one of the biggest things that immediately comes to mind is like key management, custody of these assets, things like that. But yeah, I could see definitely more institutions starting to adopt that. Like you said, even for sending a payment to somebody outside the United States on PayPal or what are you paying, like 6% plus in fees? So definitely a lot of margin to be compressed there.
Exactly. That's right. And I think what's particularly interesting about this is that it impacts businesses much more than your average consumer, especially like your average American consumer who is really well served by the banking industry. Like Venmo works pretty well, banks work pretty well. Most people can get a bank account if they want to, at least in the developed world in the United States. So as a consumer, I don't necessarily feel like the full value prop of this because my system works well enough for me. Whereas if you're a low margin cross-border business doing B2B payments and you really depend on like a payment settling or vendor payment settling or getting like a supplier to like send you goods in time for a certain like low margin business, like that, it could be make or break for business. Like it could create a whole new class of businesses that can't even exist in the current climate environment. So that's like an area I get really excited about. It's like, here's a real tangible use case right now that could help unlock more economic value in the world. I can totally get behind that.
Yeah.
Yeah.
Tangible as it gets. How are you guys dealing with RWAs? Any real world assets? Any challenges on that front?
So, nascent space. I do think like it'll be interesting to see how that plays out and if it gets more and more adoption. Like there's sort of like really basic things like we're starting to see money market funds on chain like Biddle Fund and things like that. But yeah, I mean, if a lot more stuff starts getting tokenized on chain, it creates more opportunities for the type of business that we're building, right? Because people are still going to need to track that. They're still going to do accounting and taxes on that. They're still going to need to figure out how to, keep track of their transaction ecosystem on chain. So it's still nascent. But if that picks up and takes off in a meaningful way, we would be excited about supporting that from an accounting lens.
Yeah, for sure. What are your thoughts on obviously the AI agent LLM narrative, how that's going to evolve with crypto? Obviously, there's a lot of nuances. There's AI tokens now. You have crypto and AI combined together.
I do think that will be a game-changing space. Still nascent also, like AI agents themselves are still quite nascent. But it's pretty crazy to start seeing what things like Operator can do. And if you unleash an agent to go do things, like the level of tasks it can parallelize for you and automate for you are crazy. Like I've become a super power user of LLMs at this point. It's just wild. And I have a young daughter. Like it's just hard for me to imagine what her life is going to be like 30 years from now. And that's just with information gathering, literally just telling an LLM or an agent to go research some stuff and produce a report with some facts summarized. But if you could put money behind that and enable it to use financial value to go do tasks, the level of possibilities that opens up for what these agents can do is just a totally next level, right? And so it's undeniable that agents are going to have access to financial resources at some point to achieve more complicated tasks. And what better way to do that than with digital native currency? So all of this seems totally inevitable. It's quite nascent right now, but it will happen.
Yeah.
Yeah, that's actually a big one. Any internal AI use case? Obviously, document extraction at scale is a big one I see for folks, especially bridging the legacy CPA accounting world into the the newest regime.
Yeah, there's a lot of things happening like in the general space. I mean, I am actually an investor in a company that's doing something very similar to that right now, focusing on like the logistics industry. But there's tons of companies that are doing this for the accounting space as well to try to automate a lot of these common tedious workflows or workflows that haven't changed a lot. But yeah, I mean, basically AI is getting plugged into every element of everything, even in like in a very small way, like being able to have like smart AI based search, to really big ways, like fully automated workflows. So yeah, I mean, I expect the AI disruption / revolution to impact every business on just as big, or if not bigger scale than the way the internet disrupted every industry and every business. And we have first row seats at the ground level to see this all playing out right now. And it's early, but it's going to happen. It's a tidal wave of change that's going to happen in counting in particular. Who is doing this in a really interesting way? I mean, yeah, there's just a big part of accounting that I've sort of seen is like gathering information and reconciling different data sources and putting together kind of like the financial information. There's no reason why any of that should be done manually. Much of that should be automated and reconciled and put into these like AI workflows. And we're definitely going to see that play out more and more. And then, eventually we might get to a case where instead of having one accountant doing one tax return one at a time, you kind of have these workflows where these AI agents are kind of enabling one accountant to serve 50 customers or 50 users with the same bandwidth that they used to be able to do one. And maybe eventually it'll all be automated. And now we're getting into like sort of like super intelligence type stuff. But yeah, more and more things are going to be automated like this. It just makes sense.
You mentioned you're also like a big like personal power user. What are maybe what's like one thing that's like really exciting to you that you've seen recently, or that really like, anything that really jumps out to you?
I basically think like LLMs have just changed the way I live, to be honest. And so like any type of like, I mean, there's simple things like drafting communications and stuff like that. It's a great way to basically put in some goals of what you're trying to communicate and then get a first draft. And, it's still at a stage where you often have to edit it and fine tune it to make it really like, pack the punch that you want or land the message that you want. But it's just so easy to generate content and draft content at this point. So simple things like that, but also in decision making, like interpersonal relationships or dealing with various strategic business decisions or things like that. You can just put in so much context and then talk through different scenarios or talk through the pros and cons of different types of decisions. So you just have this super intelligent system to help navigate through any type of thought process or decision or idea. And so, yeah, it's just totally changed the way I live and operate.
Yeah. It's like funny to think like when you were saying like started in 2017, like I was just kind of going through my head. I was like, oh, that's like pre-AI. Like, there's, you didn't have an accounting background. So there's like, you can't just ask ChatGPT or one of these systems, what do I do here? You had to find a professional. It's funny to think about. It's almost like a different world since 22, really.
Yeah. To your point, talking about just kind of, I've never really seen, this is obviously I'm a power user as well. I've never seen, and this could be eventually is where we go with it. Some of this stuff is where personalizing a response based on your specific, in this case, tax situation, right? Getting a response like, hey, I have this problem. It's not just a chat bot. There's been chat bots around forever. This is actually a knowledgeable, interactive, that's part of your ecosystem. For example, like CoinTracker that can say, hey, I'm looking for a CPA. Here's my situation. You have all my data. Give me a recommendation on my tax situation, given these situations, and it will just do it for me.
Exactly.
At scale.
Exactly that. And the beauty of these systems is the more context you feed it, the more personalized and beneficial it can actually be for you. And so if you have a lot of context and history, like for example, every crypto transaction someone has ever made, you can basically create these like, it's not just generic advice that you can just post on an SEO'd blog post for everyone. It's like, here is Michael's specific situation based on everything he's ever done. That's the beauty of this system.
Well, then, and it's interesting. You guys have a unique lens because you can combine the personal consumer with the professional business. Like, here's what's happening in my personal life from a tax perspective. Here's what's happening in my business. I need to do this on the personal side and this on the business side. Combine the two and give me a result.
Exactly. Right? There's which is big beauty in that too.
Mm-hmm. Yeah. Now you guys have a lot of data too. I would assume that's definitely beneficial. Anybody who has data, you're having a lot of users on your system and platform. That would be helpful.
For sure. Yeah, we do have to be careful. Like we have really strong sort of like trust agreements with our customers that we're not going to like misuse their data, sell to third parties and things like that, which we don't
Of
do.
course.
But yes, like I think for the user who like wants the benefit of this and there's a clear value prop for them, it's like, hey, you can help me make better financial decisions or understand what I should do or make recommendations or whatever. Like, yeah, it becomes really interesting, super powerful. I get excited about that.
Yeah, I guess maybe just my thought was with that thought process was being able to see around the corner as a business, having all that
Yes.
data
Yes.
as you see what your clients or your users are doing, being able to make decisions better than the one who just is kind of operating in very nascent ways.
Exactly.
Shall we say?
Exactly. And yeah, like with these LLM systems too, for example, like I've gotten to the point where I have just input tons of information about myself into them, not even asking questions, just being like,
Right.
this is who I am, this is my family situation, this is my financial situation, this is my job history, like here are my goals, whatever, like just putting in more context because it makes it so much more valuable. And similarly to your point with these systems, if we can say like, yeah, here is some more information about the real world background of this person and or all of the crypto transaction information and or their goals that they have and or their business information or whatever, it just makes it so much more powerful and personalized.
Yeah.
Yeah.
It's funny.
Absolutely.
There's been like situations where I'm, talking to ChatGPT and I bring up something and it brings up just like unrelated stuff. It's like, oh, you and Callie, my wife, or, it's like, oh yeah, for your, Airbnb. I'm like, I didn't bring this up. You have that stored somewhere, isn't it?
It is freaky how, I mean, I've even do like uploaded my Strike Finders profile. That's my personality. Like, here's how I am as a person. Add that as a context layer of how you should respond.
I love that.
And then it gets very granular and insightful, which is a little scary at times.
I love that. I'm gonna go do that after this.
Yeah, just add that layer as like act like this, and add that, your personality profile, your strength finders.
Yeah.
Yeah, and act like this. And how would you respond to this, given how how I communicate and operate?
I love that.
And it really surprised me how, and it's all pattern recognition, right? I mean, at a level.
Yeah, totally.
So it definitely is pretty cool.
Chandan, as you wind down here, what's been the most rewarding part of your journey as a CEO of CoinTracker? And, what are some of the biggest lessons that you've learned along the way?
Yeah. So just minor clarification. I'm the co-founder of CoinTracker, but my co-founder is the CEO of the company. But in that journey of 8 years together, it's been crazy, like a lot of personal growth and professional growth for both of us, for sure. And if I had to pick just one thing that is the most rewarding, it would be basically building cool stuff with people I really enjoy working with and solving user problems. At the end of the day, that's what really drives me and gets me excited. Like when we have a customer who's like, oh, I was really struggling with this thing and you guys helped solve it for me. And I'm just like so grateful. Like that's the best feeling in the world. It gives me a lot of meaning and purpose in life. So it's building hard stuff with great people that solve users' problems. Lessons along the way. I mean, there's just so many. You just kind of keep struggling through one obstacle after another and keep pushing forward. But yeah, I think like one of my favorite principles that we've come up with as a company is this idea of thinking long-term, but shipping today. Mm-hmm. And I really think I love it because it captures kind of like the essence of like how I think we should really build great products, whether it's around cryptocurrency tax and accounting or honestly anything. It's like having this really big, bold, ambitious, long-term vision of how we think the world should be. But then every day incrementally making progress towards that. And maybe like that's one of the top lessons I've learned is have a big vision and then like every day like take one small step towards it. And yep, that's worked well for us so far.
Yeah.
No, that's great. That's
awesome.
A great framework.
Awesome. Well, Chandan, great place to end off. Really appreciate your time. This is, pleasure having you. Skylar and I have used your product for years. So, great to meet you in person, be able to put a face to the software. Where could people go to connect with you and learn more about CoinTracker?
Yeah, for sure. I mean, our website is cointracker.com. Check us out. And then we have the enterprise product, cointracker.com/enterprise, which is coming out now. And, we're also available on X, very responsive at CoinTracker, at CoinTracker ENT for enterprise product, CoinTracker ENT. And then I'm personally at Chandan G Lodha, ChandangG Lodha, and happy to connect with people, answer questions, talk about cool new ideas and products. Always down to discuss.
On the enterprise side, who do you guys, who's your ideal target? Who do you
Basically, it's any organization that's using crypto. So some examples of customers that we have are nonprofits like the Blockchain Association that are getting crypto donations, or 501c4 organizations that are kind of doing political type stuff. There are protocol projects like Story Labs, or electric coin company Zcash that are running their own foundations or have their own L1s or their own L2s. There are, basically anyone who's accepting crypto payments or making crypto vendor payments. Typically, this kind of stuff ends up being most useful for companies when they're at the point where they're making over 100 crypto transactions per year or dealing in more than one crypto asset. So if you have 2 or more crypto assets or have more than 100 transactions, that's where I would recommend hey, you should really think about investing in setting up a subledger system. This will automate all of your compliance and set you up for future success. And before that, you could probably get away with something simple in a spreadsheet, whatever.
Yeah, that's great. Well, this has been awesome. We appreciate the conversation, and we'll also make sure to include all your contact info in the show notes. And congrats on all the success, and appreciate you sharing your story.